Well, a stock market rally is close to 3 months old in the UK, and in that time it's the mid-cap space that has been the strongest section of the market. The F&C UK mid-cap fund specialises in just such investments. It's managed by Michael Ulrich, and I'm delighted to say that he has joined us here today on The Pulse to help us pick some winners. Thank you for coming in today. If I may begin just by asking you about the mid-cap sector and what makes it so appealing to you.
Well, I think if you look historically, it's no surprise to us that it's outperforming. I mean, since FTSE started measuring the mid-cap index, which is about 25 years ago, mid-cap's outperformed the FTSE 100 60% of the time, and it's outperformed the small cap by the same amount of time if you look at it in discrete years. I think you've got to look at it and think, is there a reason for that? And we think that ultimately there may be an optimal size for a company. So the size of the mid-cap companies is such that they still have plenty of room to grow. They can dominate a niche, but yet they're not overly bureaucratic. If you think of some of the very large mega-cap companies, the room for growth is difficult. You know, an acquisition has to be very large if it's going to be meaningful. And relative to some of the smaller cap companies, the mid-cap companies are big enough to attract the top talent and, as I say, sort of be a meaningful presence in that niche, gain scale in their markets. So overall, it's I think, over the long term, an attractive part of the market.
Now, you look at profits not in terms of what's happening next year, but with a rather more long-term view. Is that correct?
Yes, I think that's the key to why the fund's done well, certainly this year. But we also managed to outperform our markets on the way down as well. So it's not really about a macro call or a beta call. It's bottom up and really meeting lots of companies, understanding the fundamental drivers, and focusing on those companies that have a sort of long-term future, even if they're going to have a difficult period in a recession. We all know, recessions end, economies recover, and you're looking for those companies where you have some sort of structural long-term driver that's really going to benefit it over a sort of longer duration than next quarter's earnings. Okay.
Now, there must be certain sectors that are outperforming others, and the one that immediately springs to mind is any company that's involved in emerging markets elsewhere.
Yes, and I think that one of the great things about investing in the UK market as a whole is that you may initially get a perception that you're focused on the UK domestic economy, and we all know that there are issues there. We've got the austerity budget still to come and the impacts of that. But the UK market has a plethora of companies listed on it where the main drivers, the end markets, the customers, are overseas. And so what's really helped us over the last few years is our exposure to end markets that have been growing with perhaps some sort of structural drivers. So if in terms of emerging markets, the sort of well-trodden theme of industrialisation in the so-called BRIC countries. There's plenty of opportunity for us to get exposure to that. But
at the end of the day, it must all be about the management of the individual companies. You can't just look at broad sectors. You've got to look at individuals, have you?
It's both. I mean, you can have great management in a terrible company, and there's really not a great deal they can do. However, I mean, the first thing we will do is look at the company itself, its market positions, its competitive position, what the long-term outlook is. But we spend a lot of time meeting management, and I think lots of people do meet management, and I think the important question for us really is how capable are they? Do we trust them? We're looking at sort of their integrity. Are they doing what they say they're going to do? And do they really understand what we consider the way to create value? So that's sort of making sure you allocate capital properly, you get a return on investment. That's quite different to a meeting with a company where you're really trying to get out of them what next quarter's earnings are going to be.
Yeah. It's fascinating stuff, Michael Ulrich. Thank you very much indeed for joining us.
Thank you very much.